If you are broke, my challenge to you is don't entertain yourself. Educate yourself. Do you realize if you're struggling financially right now, you're struggling financially because there's some truth about finance that you don't know. And if that's the primary reason, by the way, it is. There's a level of you have a level of awareness in an arena where awareness is necessary, and until you develop that awareness, you're not going to be financially free. So how much time, effort, and energy do you want to put into finding the thing that's missing in your mind financially? Because if you're struggling financially, you're not struggling financially because you don't have any money. If you're broke, you're not broke because you don't have any money. You don't have any money because you're broke. What does that mean? Like the truth has been broken off from your mind when it comes to something money. I know because it was true for me. I lacked awareness. All transformation begins with awareness.
.365, shake my hand, and welcome to another video on the 365 Trading Academy channel. This is a war room video, just so we're clear. Traders war rooms are my weekly forecasts. Okay, let's put it that way. But I'm a swing trader, so it's not just for this week. We're looking at, a midterm market range for the next 1 to 2 to 3 weeks. And I give you all my market signals, what I'm buying, selling, where I am buying and selling. At 365, we don't sell signals. We don't trade for you. Anyone who purports to that is a scam, is a liar. I'll do it here with you in front of you so that you always know in full transparency what assets I'm buying, what am I selling, and the logic behind that. It's also in these war rooms where I teach you guys how to read market sentiment, market data, the COT data as well, and basically how to put all these things together to come up with a very good trading outcome. If you know who I am, I'm supply and demand trader. If not, I'm head trader of 365 Trading Academy, and I'm very, very excited to get started, right? So I'm a little behind with my goals and dreams in terms of how I want to output videos in YouTube. This year, we're still collaborating my calendar with the team, so just bear with us, right? So you're gonna see this in midweek. It was supposed to be out on Sunday because I dropped a 365 crypto video during the weekend, right? So just so we're clear, moving forward, I'm gonna do part 1 of the war room right now, so that I can keep it as short and as compact as possible. And the rest of the assets, I'm gonna look forward to doing them with you over the weekend. So please expect War Room 95 this coming weekend, right? The Valentine's weekend, so to speak, right? This is War Room 94. I just wanna get to presets. I wanna set the tone today. Market sentiment, market data, all the big questions. And I want us to look at a couple of currency pairs, all the big indices in this particular video, and just to see where's price going, so as to better kind of like see where the entire basket is going. I'll refer a little bit to COT data in this particular video. I will definitely look at charts in this particular video, and if you like anything that you see, press the like button, hit the subscribe button, and let's just get started, right? And just one or two announcements. Number one, war rooms Sundays, Thursdays 365 crypto. So this coming Thursday, please expect episode 2 on the same channel. So it'll be so much better and wiser for you to hit your notification bell. All right. So by the time we are done, by the end of the year, no one should have an excuse. All the information was given to you. Right. So a couple of things to kind of like look at, and I just really I'm still trying to work it out in my mind how to start today, which assets I should leave out, which assets I should include, because whatever I do in today's War Room 94, I will not include in War Room 95. So there's another reason why you should subscribe and hit that notification so you get these videos in the right order. All right, because I am a swing trader, so my long-term perspective on the markets tends to linger for a while, right? So I think this is what I want to discuss with you guys today. All right, I really want to cover the dollar. So I'm going to look at the DXY chart by itself, and then I'm going to let's look at all the currency charts. So we're going to look at dollar AXY, the Australian dollar, BXY, the pound, SXY, Swiss franc, ZXY, the New Zealand dollar, EXY, the euro. Why am I saying dollar at the end? Just the euro, and JXY, the Japanese yen. All right, so we're going to start with that, I think. Then we're going to give like a nice bearish overtone or bearish or bullish overtone across the market to look at the sentiment. I want to go back to basics. How do you guys get your tape? What are you guys reading? How much time do you spend looking at tape? Right? Tape is going to be so important in 2025. Probably for the next 4 years, but specifically now, while most of you guys are getting used to Trump and Elon Musk and market volatility, getting used to tape, understanding what tweet to read, what the news is telling you, and what the charts are telling you. We've played this game before as 365, extremely successful in Trump's first term. This is not our first time at the rodeo, right? Politicians are talking right at masterminds, at magic tricks. Look here while I do this over here. I'll crush the market, right? Trump completely crushed the market, but Trump actually tweeted, buy Ethereum now, you'll thank me later. 2 hours later, that same tweet had been edited and removed thank me later because that was an insider bias signal, which is technically illegal, right? So there's going to be a lot of things moving in the market, everything. A good trader is not the type of trader who's going to sit, drives me mad. It's not good for my mental state. I know the world is messed up. I don't need the finer detail. But as a trader, it will make you feel like you always need to be moving. You always need to be buying or selling something. And that's 100% guaranteed way to mess up your P&L, your profit and loss balance, whether it's for stocks, currencies, trading, or investing. Whatever portfolio it is that you're working on, that is not a good way to trade. A good way to trade is to understand that nothing under the sun is new, right? That's from the book of Ephesians. There than how the balance started. That's how capitalists think. It's profits no matter what, right? So because we know that is their primary agenda, they will not be changing how they make money. They will do the same thing they've always done. So my goal is to teach you guys how to read those order flows and how to make sense of what's coming in, right? Just a kind reminder, because of the political climate, this channel is not a political channel. This channel doesn't give a things. And if you're narrow-minded with one perspective, you're going to misinterpret me. When I talk about Trump, when I talk about Elon, when I talk about this and that, I am just talking markets. I am not taking a position in their politics. I'm simply telling you what I think is going to happen with the markets, right? I'm not an American voter, and even if I was an American, I wouldn't vote. I don't even vote where I am, all right? I'm anti-status. I'm giving you guys a prognosis about the actual markets despite your political agenda, right? So if you care about your trading, let's tune in, right? And in the background, there is me teaching, by the way. That's what our course would look like. If you want to join us, The link's down below. Right, let's go back to basics, ladies and gentlemen, because I feel like this is something that some of you guys have forgotten as quickly as possible. And when I say back to basics, this is literally what I'm referring to. In front of you, or soon to be in front of you, is where you should start your day as a trader. This is where you should get your news for trading. Not your news for the world where there are wars. No, I'm saying for trading, we all go to Forex Live. Why Forex Live? Forex Live is going to give us a quick take, a quick head start about how prices are opening and closing. There are 3 sessions happening 24/7 while you eat, sleep, go to work, not go to work. Markets are moving. And this is the only place I can guarantee you're going to keep track of things, right? Forex Live is as simple as all that. Now, you need to get sentimental analysis training. So when you see a headline like this saying, a point to note about the US CPI report later. I think CPI is dropping today. Oh my goodness. What perfect timing we have. Well, by the time you see this video, it'll be too late. But I might as well throw in some CPI analysis into this video, and then you can watch later and see if I was right or wrong. But you see, already you know that this is a big day for the market. When the US market opens, right, CPI data is coming out today. What's CPI? CPI is tracking inflation rate month over month. Why is CPI important? Well, if CPI comes out hotter than expected, the dollar is going to become stronger. Why is that important? Well, because if I'm buying dollar pairs, I have an edge. And that means I can sell Euro USD, Pound USD if my analysis feeds that. Why is that important? If I know that America is still struggling with the inflation, I can start to predict what Jerome Powell, the FOMC, is going to say. Why is that important? Because sometimes Trump can make the markets shake, but Daddy Powell will always come back to do a massive correction. So I need to know what both these crazy people are doing at both times. So Powell, this is a very big report, right? So if you didn't go through the tape, or you're not looking at your Forex factory, you wouldn't know this. So I'll encourage all traders, start your day with this. Start each session with this. So if you're trading in the morning like me, and you're looking at the London session, I start here, and then after lunch, I'll come back quickly and check on the new things before the New York session starts, right? So let's quickly go through the tape. So we've got CPI coming out later. I'm not even going to open it. I'm just reading headlines. I'm just trying to get a sentiment, right? What is distribution focus for US CPI? See, CPI again, it's a big thing. European indices hold a slight advance in the open today. So that's the London session. So things like UK 100, CAC 40, that's what they're talking about. ECB, who is the ECB? European Central Bank says US tariffs will most likely have a negative impact on the economy. Which economy? The European economy. Does that mean there's going to be a strong euro or a weak euro? Okay, so already in 30 seconds, CPI is coming. If CPI makes dollar strong, then I'm going to have a strong dollar. For that to happen, I need the number to be above expected in CPI. Then I have the European Central Bank 30 seconds later saying the American tariffs will most likely have a negative impact on our economy. Oh my goodness. Trade idea number 1, Euro USD sell. Strong dollar means euro is weak, but Euro Central Bank is putting out a fear sentiment that if Trump continues what he's doing with these tariffs, our economy is going to be weak. I already have information that is guiding me towards selling Euro USD, but there's still more. I need to get more correlation, right? But that's just what it is. So when I wake up in the morning and I see this type of stuff, I kind of like know what I'm looking for. All right. So please do this in your own spare time. See if you understand these things. If you don't understand them, click on them. It's very short blurbs. This is more effective than following people on Twitter. I promise you. US inflation data in focus. What's the inflation data? CPI. But will Trump tariffs steal the thunder? So that means the markets are expecting inflation data on one end, but on the other side, the markets are also fearful that Trump might pull a rug again, right? So there's something to look forward to or look around, right? Wall Street Journal, what we know about Trump's reciprocal tariffs, right? So there's still a lot going on. Right, and the final one that I'll do with you, Federal Reserve Bank of Atlanta, the president, blah, 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 speaks on Wednesday, right? So just so you know, Jerome Powell, which is the chairperson of FOMC, was in Congress for the last 2 days. Tuesday and Wednesday, they were grilling him, giving him his report, and then CPI comes out this week. This is an incredibly insane a week for the markets, right? So once you do something like this, some type of sentiment check. Now you can come to your charts. I would highly recommend, because you kind of like have a bias. It's not a confirmation bias, but it's a sentimental bias. You kind of like, no, this is what I should be looking out for. For a beginner trader, you now know what to avoid, right? You know that, okay, the dollar is hot this week, or at least today. Let me avoid that with my small account. Let me stay away from assets that are trending on Forex Live in the news right now. That's also okay, because you're not yet ready to handle that. All right. So like I said, and by the way, I'm going to refer a lot to COTC in War Room 94 and 95, the next two War Rooms, today and the next one. But I won't be able to show you my CFTC data spreadsheet. I apologize. The reason for that is the one that I have that's up to date is not for public consumption. So a lot of our floor trader things, next to each column, we put holdings and what we're holding and some private stuff that will be very, disingenuous if I share with you. However, on my YouTube channel, there is a video called Master Trader Spreadsheets or something along those lines. I'll put it up here if I remember. Master Trader Spreadsheets. And that in that particular video, I teach you guys how to build a CFTC data spreadsheet, which you should keep up to date yourself every single week. So I'm going to be telling you things in face value, okay, what it is, but I can't show you that because the one that I have up to date is not for, it's one I've been working on for the last 2 years when I wasn't making videos, and it's not ready for public consumption because our holdings and amounts and people's names are on it and yeah, all that good stuff. Right, 365, shake my hand one more time, right? And now we're starting, right? So if you don't know, now you know, we're really starting. So I would highly suggest you strap in, put on your seatbelt. I hope you're strapped in. And
you silly groupie, that ain't me. Let me show you how to really do it. I'm strapped in. I'll clap you in the coma. Madness. I can snap it anymore.
And let's get to it. Right. So the first thing I want us to dive into is the dollar chart, or maybe let's triple confirm everything that I just said. So let's go to Forex Factory. I have to remember. I have to teach. A little bit. I have to slow down a little bit. And if you're new to my teaching style, I get animated, I move fast, I get excited. I'm just like that, you know. So I'm going to go to Forex Factory. Forex Factory is where you want to get your up-to-date news data. Forex Factory is where you really need to know like economic impact events. Forex Factory is also a good place to know when to stay out of the markets. Or for some of you who like over-risking, over-trading, or like risky events, there it is here. Right, so today is the 12th. Oh, I've got chess at my kids' school today. I have to, okay, so I'm not going to be long. Right, there we go. 3:30 p.m. South African time, CPI. The number that they want is 0.3%. I'm recording this video at 17 past 12, and this is going to be at 3:30. My job isn't, I could teach you how to build models, brother. We could build economic models together on this channel and teach you how to get to that exact number. You need to go to the Bureau of Labor Statistics, where premium researchers put together this data for you, where like in South Africa, I always laugh at the headlines. They're like, unemployment is only at 24%, right? There's premium real researchers who say that unemployment is at 45%. If you go with news headlines for things like stats and all that stuff, for your trading, you will suffer, right? So this is the official database for these things, right? So you can see if I click here, the Bureau of Labor Statistics shows us that the last CPI inflation report was on the 15th of January, and inflation came cool, 0.2. The expectation by the banks and economists was 0.3%. Now, how do they get these numbers? They ask a total of 60 to something like 75 world expert economists who all look at the same data and they try to get to the same conclusion. We call that data saturation, right? Where you've got almost a lot of information starting to confirm the exact same things. Now, if inflation data at 3:30 today, and I'll be already long gone playing chess with my kids because I don't really stick around and watch the markets like a hawk, right? So at 0.3% is today's expectation. If it comes at 0.4, if it comes at 0.5, so anything above 0.3, I expect the dollar to go insane. I expect the dollar to rally because it's a market signal that inflation, the inflation dinosaur is back again, right? But that's over month. The big one that the banks will really be looking at is this one, the yearly inflation, right? So they wanted at 2.9%. And you can see from, say, September last year, 2.5 was good. Then we went to 2.4 in October. And then we started to go back up, 2.6, 2.7, 2.9. What does that tell you? While inflation looks low month to month, for example, 0.2 in the previous month of January, if you look at the long-term scale since September, somewhere along the line, things have been going more wrong and wrong. Inflation is slowly creeping up. Jerome Powell's target for the US economy inflation is at under 2%. Under 2%. As of January, the actual is at 2.9%. The forecast now, today, on the 12th of February, is at least stay at 2.9%. Don't go any higher, right? So these three numbers might vex you, right? Core CPI might go a little bit lower, while the CPI month to month might go a little bit higher. Last month, they wanted 0.4%, they got 0.4%. This month, they want to see this number go down. They wanted to go to 0.3%. So if it comes back at 0.4%, you know what's going to happen. If the dollar gains strength, gains an edge over the market, over other currencies, it means risk on assets will fall. Euro USD, risk on. Pound USD, risk on. Bitcoin, crypto, risk on. Stocks, risk on. They have to fall because markets are like, oh, problems, Trump is doing it again, or whatever the problems are. Oh, it's just inflation, actually. This is not even a Trump problem. Inflation is a problem that was there in the Biden administration, but it's technically a problem that got started in the first Trump administration. It was Trump and Powell in the first administration who were pumping money like they're in a club. Remember, they were making it rain everywhere, right? When they were printing money because of COVID, okay? So this is a long-term problem. You don't control inflation, you get into recession, right? So that's the big deal. But because there are other issues in the market like tariffs, which I can't predict. I can't predict what that man's going to say today. I can't predict if tomorrow he's going to want to invade Botswana or take over Zimbabwe or some other small African country that nobody knows about. I really can't predict that stuff, right? So that's going to be up to us to really know our zones, right? So we're spending a bit of time, understanding that for the rest of the week. I think there are a couple of things. I think there's going to be pound news this week. If I remember correctly on my dashboard, there's pound, something to do with the GDP. There we go. On Thursday, pound. So look out for that. Swiss franc CPI is a big deal, but we don't normally talk about all these other currencies on the channel. PPI is also this week. This is now the cost on the manufacturing end. CPI is inflation that you, the consumer, experience. That's a big deal. Then on Valentine's Day, we get some retail data, right? So it's quite a volatile week for the markets. Minus Trump, right? So if you add Trump all together, everybody's going to have a long week, right? So I really feel like I've spent, quite some time, significant time on this particular thing. Let's quickly get into our charts, right? So the first chart I want to look into is the dollar. And maybe let me just be very clear. I want to look at the dollar today, or in War Room 94. I want to look at the dollar. I want to look at AXY, BXY, SXY, ZXY, EXY, JXY, like I said earlier on. And then in the indices, in this particular video, I want to look at the Japanese index. So that's JPN 225. I want to look at NASDAQ 100. I want to look at the Russell 2000 because the Russell is a macro cap company. And because it's, Russell is a macro cap company, what that actually means is, you get a very good idea of how the actual economy is doing. This is this big companies, in the S&P 500, right? So it's always good to look at that chart. So please, stick around for that. And then we'll look at S&P 500, UK 100, the US 30. If there's time, based on me rushing over to the school to play some chess with the kids, I might look at AUD, USD, Euro USD, Pound USD, Gold, Oil, and USD JPY. And God willing, I really would feel great if I can get through those charts, right? If I can get through just those charts, I know I've done a good job because then it will set you guys up for what we need to do, right? So let's fix the screen up there. So in front of you should be the dollar. Beautiful, right? So look at my dollar. A couple of things about the dollar. Let's go to the governing time frame. This is a war room, so I try not to teach too much, but teaching is a big part of who I am, apparently, at least according to my loving partner. So I always promise myself I'll just keep it short, and I won't teach them. They must do the course. And I just find myself teaching because at the end of the day, it is better for you to know than not to know, right? So we're looking at the dollar here, ladies and gentlemen. I've done an incredible video on the US dollar somewhere on my YouTube channel, where I teach you guys how to use this chart to predict the next US president. I go all the way back to 1964 and I show you that the markets are never wrong. The markets are never wrong because elections are not a real thing. Democracy is not real. Because it's not real, it can be paid for and bought. Because you can pay and buy democracy, you can actually predict who's doing the buying and who's doing the selling, right? And that's all we do. It's not a conspiracy theory, it's a data issue. It's right there in front of you. So watch that video, right? But here's what you need to know quickly. Republicans use supplies. So for every presidential president since 1960 something, we went back in that video all the way, historically went all the way back to as far as this chart could give us. Republicans will come into power at a supply. What do supplies do? Supply means sell. Supply means depress, decompress, reduce. All right. So when we are in supply zones, as 365 trades, we want to sell. That's what that course is going to teach you. So use that link now while you have a chance to learn before markets fly and leave you by. All right. So when Republicans come into power, they use supplies. Democrats generally use demands. Guys, this is not just a technical analysis thing. This actually influences the macroeconomic policies that these governments adopt while they're in power. The executive orders that Trump is signing are not just a sign of a madman. Yes, he's gone bananas, right? But they are a reflection of Republican economic macro policies. Hence, he fires and hires who he wants, people who are going to align with their agenda, whatever the agenda is, okay? Now, if price comes from a supply, it means whatever that thing is, we're going to see it start to fall. So historically speaking, Republicans create a softer dollar. Right now, we have a dollar high on cocaine, all right? A dollar ravaging and ravaging through multiple supplies. A dollar still on the high of what Democrats do. Democrats want a strong dollar. Now, how this works is, listen to the nationalist rhetoric. Nationalism is the thing, the ideology. It is the thinking, the superstructure of the world. But in this case of America right now, is nationalism, okay? There's no debating about it. It's not just random. Proudly American, make America great again. That's nationalistic ideology. South Africa is only for South Africans. That's nationalism. Abahambe, get the foreigners. All these things strand from somewhere. What is the nation? Now, this is important because when you get a Republican president who says he wants to make America great again, and we know that Republicans start from a supply, my trading strategy tells me that the macro policy overall might not be in the first 100 days of presidency, but for the next 4 years, he's going to target stimulating the economy from within. So for these guys, you're looking at manufacturing, you're looking at creating blue-collar jobs from within. You're looking at producing more stuff in America than in China from within. And that affects how you manipulate and influence the market. That's the game. That's the game. It affects your portfolios. If you don't know what you're doing, that's the game. The Democrats, you can do the opposite. All right? No one is innocent in this game, right? So now, if you look at the dollar, when Trump came into power, let's remove all these drawings. When Trump came into power, which would be about November, there we go, November here, you will notice that just literally, if you think it's a coincidence, then guess what? This coincidence has been happening since 1964, or even earlier, 1900s, right? If you think it's a conspiracy theory, well, it's been happening nonstop for a very long time, right? So this area of value here that I've just drawn, or this rectangle, let's call it a rectangle for you guys even down the course, and I've marked it yellow, right? This area here, man, I don't want to remove my drawings because You guys are not there when I have to rebuild my charts again for myself. You're just not there. You're not there for me, man. So I don't want to lose that stuff. I lost a lot of my work doing one video for you guys, and I was just lazy to redraw it again. So let's use a different chart. So you see here, this yellow area started there from October 2023. This is the supply that Mr. President Donald Trump came into contact with when he got elected as president for the second time. What do they call him? Felon 47, right? So when Mr. Felon 47 jumped into power, this is where we were in November. You see that there? And this supply was broken. But as it was being broken, nonetheless, we needed a supply to confirm. If Biden, or what's her name, Kamala Harris, if Kamala Harris had, if markets were moving down towards a demand in, say, September, October last year, and price was somewhere here last year, right? I hope I'm making sense. I'm going to teach you something, but I've taught this already, so I'm technically just wasting time because I've taught this before. But people don't want to subscribe to the channel that puts bread on their table. Right, look at this. Now, if Kamala Harris was here, say we're in August, and in September, October, price was there, I was going to say definitely heavy, because I would know that they're trying to get the dollar to bounce over demand. Backtest this stuff or just watch the video as I backtest it for you, either way. But because price was already here, you see where price is here? In October of 2024, January, February, March, April, May, June, July, August, September, October. The next month, ain't no way the next month is just going to turn around out of nowhere and make contact with demand. When a supply is this close, when a valid supply is this close, and an almost supply is this close, the next contact is going to be there. It's fine. When I teach you this stuff, I teach you to look at your areas of value carefully. So this supply is already battered down. That means the institutions have been holding it for as long as possible. As long as possible. I mean, price stayed there for April, May, June, July, literally trying to buy 2 financial quarters of a range to get this election. I don't want to be misquoted. Allegedly, we use the word alleged. And everything I'm about to say is allegedly up until the end of this video. Everything I'm about to say, allegedly. Right. So they were going to allegedly hold price there. Well, who's they? Institutions, banks, real money, billionaires, the ones who are running the world right now. The ones who can say, I'm buying Twitter to promote free speech, and then when I now own Twitter, I decide what free speech is. Those people, when that is happening, right, they held price there for as long as possible, okay, to allow a specific motion to happen. Now, Trump is in, and that supply is gone. Leroy, what do you mean it's gone? Off. Boom. Because remember, dollar and gold will go crazy. Dollar will follow yields. So if there's a high rate of return yields, interest rate yields, right, dollar will go up. But if there's also market uncertainty, market fear, then dollar becomes a safe haven. When Trump says, listen, let me tell you something, if BRICS decides to remove the dollar and blah, 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 they'll get 100% tariffs because nobody can replace the dollar. Dollar's like, oh, I'm that valuable. He's giving a signal to investors. Invest in America. Invest in the dollar. The rate of return is good. Dollar is going to be strong. So a supply is taken out. Now, what does it mean? Well, if you look left, whoa, could there be a higher supply? Because we know that to make real money in the markets, you sell high, buy low. So this supply, number one, glass effect. That's in my module 1. No time to break that down. But number 2, there's a higher supply to sell from, which is where I think Trump's first year is trying to take us to before the Republican effect of softening the dollar. I hope that makes sense. I really hope that makes sense. Now, in terms of trade this week anyways, because I'm not here to teach, I'm just here to give out market signals. Right, so I know that the dollar is moving very, very, very close to this area here. This is pretty much the dollar's next stop. It's not an all-time high, but for me, it's the next bus stop in this rising channel. Now look at, whoopsie, apologies for that. Camera just took a little slip. I hope you guys can see me good. I don't know. It looks like something has gone wrong with the cables or something. I don't know. Can you just give me a second to sort that out? But personally, I'd like to keep going. So I'm gonna stop sharing my screen just to reset everything. If that's okay with you, then I'm gonna stop the camera. Apologies. Right, shake my hand. I'm back. I'm back. Right, there we go. Right, now it's share the screen. Right, so, something took a tumble. I might ignore some glitches and glams. I think I knocked out a cable. Guys, I apologize. I got too excited. I started slamming the table. My bad. Right, so I want us to quickly get back to where we were. And it also messes with my train of thought, man. What a dumb mistake to do. Apologies. Camera back. Looks like camera is back. I don't know. Right. I apologize for that. Right. So it's very imperative. Now, here's the last thing I want to bring up about this chart, the dollar chart, which I'm sharing right now. Right. This weird upward channel. When does it start, bro? Isn't this interesting? When the world goes crazy in the 2008-2009 crisis, all of a sudden, this incredible decline is finally starting to seek a recovery. And we're finally coming back to what happened in the early 2000s, early 2001, which is, by the way, the dot-com boom burst, right? First time IBM, those old original pioneers of computer and software, were finally slowly making our way back there in the AI generation, right? Banks think in 3 months, take profit in 1 year, in a 10-year plan. In a 10-year plan. In 2020, I kept telling people, I look at them in the eyes, like, Corona is not the problem. Your problem is 2020 marks the beginning of what we call the lost decade. And I say, don't listen to me. Go study the greats. Go study the guy who ran the best hedge fund, the biggest hedge fund, won all the awards consistently for 15 years, and he wrote it all down in his book. His name is Ray Dalio. Go study the history of economic markets. Go study the principles of success. Right? You have to, you see, burning desire means you want to learn more. These market cycles are so predictable, which reminds me, by the way, markets are not predictable. Sorry, markets are not random. Markets are not random because human beings are predictable. If human beings are predictable, it makes markets readable. When markets are readable, you can become profitable. So keep studying people who are predictable institutions. Look at this. 2009, 2008, when the whole world is crashing, the dollar gets strong. The dollar seems to benefit a lot when the world is going through a lot. Right? Anyway, so let's break this down. Right. So I'm going to remove this. I'm pretty sure I can remember where to take profit if ever I need to. Right. So this is the weekly channel on the DXY. Well, I'm still holding, but I'm not comfortable right now. Very pattern is always an interesting signal to me. It tells me that maybe I should slow down. This is a parabolic structure. You guys, when you see this on your crypto charts, you get excited and you forget that parabolic structures are as strong as a toothpick, right? They can snap at any moment, right? You actually want good structure. This is not good structure on the charts. Such a thing could easily retrace or break, right? So what you want to be very careful for those of you who are going to get into this, if you're going to get into it, and for those of you who are going to maybe think twice. I've moved so many things around, I've lost my basic chart tools. Okay, I'll come back to it later. Oh, there we go. Sorry, I apologize. There we go. Looking for a fib, right? So from here to here, I'm going to throw bullish Fibonacci. Why bullish? Because I've been buying this. And it's not really the type of trade I would want to hold and retrace all the way down here and then come back upward. It's really not. I've made very much good money on this. And sometimes it just depends what season you're in the market. A lot of you need to learn about that as well, right? Right now, I want to be more cash than in swings. I want to have more cash in swings. Because crypto is being getting hammered on live trading, right? So when markets get like this, if it's a swing trader, I'll hold because I know I can add more to an already very good position. Friday, I'll make a I am happy to start hunting down here with you for a re-entry, but I might take profit, right? I'll only make that decision on Friday. I want to see CPI, I want to see Trump, I want to see GDP, I want to see the data, right? So I make data-driven decisions. But right now, I can expect midterm softness in the dollar. All right, if CPI does not do what if CPI comes in as expected, remember that number 0.3, so now you can see it in real time. You saw that when I showed you that the video, CPI hasn't come out yet, so you'll see the power of predicting price. So if CPI comes in at 0.3 and lower, like 0.2, 0.1, like inflation is being dealt with efficiently, it will soften the dollar. And I find it interesting that already, this trade was doing so well. I was going up at 1:8. And now I'm probably down to 1:5, right? So if it comes out as actually inflation is slowing down, then there's a perfect setup right here on the weekly time frame to already start to sell off the dollar, right? On the daily time frame, the structure is not yet exactly the way I would prefer it. And excuse me, and I really do suspect that is something to do with oh, I cut some stuff off. I apologize. No wonder I was a bit confused. Right, I do suspect, so this is what we're looking at, right? So it was still at the same level. It's just that I cut stuff off earlier on. Right? Let's go back to weekly. Right, so this is why I'm saying I would love to see what happens in terms of selling off, right? So this is what it looks like on the weekly. I cut off some bars, but now you have the full picture. We're going down to daily. Right, so I'd really like to see what happens this afternoon, the CPI data, and then I'd like to hear what Trump has to say for the rest of the week with inflation and all that kind of good stuff. But you can see that the markets, just in case, had already made contact with the higher supply, governing supply on the governing time frame. And I can see I'm definitely going to have to continue this video when I come back from chess. Right, you can see that on the governing time frame, we have what we call a basing. Basing means we might turn, right? So market getting to fall, what you guys call it, a doji candle, right? For you technical traders, right? But a basing could mean we might just build a PCP. It's a basing. It's not a CP. CP is continuation pattern, but PCP means it has the potential. So we need probability to help us address this particular thing. Weekly says, look, man, I've made contact with a higher supply, which would be, this structure here on to the left, and I'm ready to sell if the data gives you the power to, because then institutions will add more sell positions. If the inflation looks softer, you don't need a strong dollar. And then the daily time frame says, yo, I don't know, bro, it just be whatever it is right now. There are a couple of sell points, in the markets right now. So right now, the latest one was created last week Friday, give or take. Am I right? Yeah, last week Friday, and today is Wednesday as I make this video. So, week to week, traders who generally intraday trade and are looking to end in a profit, short-term swing traders end in a profit by the end of the week. This is the area of value that they're trying to maximize on, right? So if you get 0.2, I expect the dollar to sell off. However, if inflation comes in hot, and there is a sign that that this might not hold, I wouldn't be surprised if this just becomes a basing and price continues to the upside. But now I'm a little bit worried about my dollar, only because there's a bigger supply at the top. But that has not been the problem, right? Don't forget, dollar can break supplies, if it needs to go up, right? So that's DXY chart. I hope that was clear. I'm worried how long it took me to get through that chart. It means it was a good decision to break this video down into two parts. Partly so I don't feel like I need to rush, but also just because of time. Right, so next one, let's look at the AXY, right? We just want to get a sense of all these currencies. Where are they? Where do they stand? So this was, I haven't looked at these charts in a long time. So when I look at a lot of interesting things, this is the Australian index that just shows the strength of the Australian dollar. Right, let's look at the 6-month chart first. I don't know if I'm logged into the right trade view. Right, 6 months chart, and this stuff is in the course. The link down below: how to profile assets, how to start, why to start like that. What's the logic behind these things? Right, Aussie likes to fall, and it is falling, and it is challenging its lowest lows right now. It's literally challenging those. Also on the 6 month, it's really unclear, but to me, it looks like it wants to fall. If I jump down to presidential chart, which is all 3 months, we can see that not much could happen from a chart like this, right? Not much. When you put a chart like this with the long-term perspective of wanting to fall, it most likely will. That's what the presenter chart is telling me. The governing chart on the monthly time frame shows me a basin, which is an indication for a reversal. Markets want to go slightly up, but how far up will they go? Somewhere here. This yellow zone that I just adjusted, I got it from the 3 months chart, which really puts your proximal line still well within a selling zone of a 3 months chart and still well within the wick space and the highest selling point of a 6 month chart. You see there, sideways accumulation on the 6 months chart. You see this candle here, candle there, candle there, sideways movement. That's accumulation. They're not accumulating buy orders there. You can clearly tell they're accumulating sell orders. So what is going to happen when price comes to retest that area? Australian dollar is going to sell. How do you use this information, Leroy? Well, if you know AXY is weak over time, even if it's not weak right now, then you will know what to pair it against. You pair the weak with the strong to get movement, right? So for example, if the dollar remains strong, but AXY is weak, what do you think Australia, AUD, USD is going to look like, right? So on the daily time frame, same thing. Sideways movement, not the chart on the weekly. Sorry, I say daily, it's weekly. Why do you keep telling me that? Right, weekly basin, very nice climb up. But if we're to take out a Fibonacci, there we go, and we make it a bearish Fibonacci. So bearish Fibonacci from top to bottom, I'm going to do something like this. Right, then you can see, again, this is my third confirmation now, that my golden ratio, or which is where at 365 we love to sell. We really love to sell. Retail traders will face a yellow zone with multiple confirmations called multiple time frame analysis. All right, then I'm going to use normal candles to see if I can get an order block in there, and I've got a very doji candle. I'm going to tap into my module 2 and use a 50% body candle to highlight, and you can see inside the golden zone. It's looking good. They want to probably be in some support or resistance line or whatever. But for me, I'm definitely going to go for the higher sell. I'm definitely going to go for the higher sell, or at least watch that zone. This is just an index or an AXY, right? So I think bidding a dead horse is not necessary. Let's move on. Clicked on the wrong thing, didn't I? BXY, we're going to get British pound currency, right? BXY, we're going to get trying to get a sense of how strong the pound is. Same thing, we're going to go 6 months. Excuse me. Perfect time to like, share, subscribe. Please don't forget. So important. It helps me get that feedback that I need, that this is really a good use of time, that I'm making an impact. Really, that's what really matters. Making an impact, and then getting to spread the word, please. Yeah? Thank you. All right, so look at this. This is what we have here on the pound. Right, again, you can tell us a sell asset, right? Happy to be falling, happy to be falling. I'm making multiple supplies and not challenging them, right? Just my long-term trading strategy. I know that very well. Right, 6 months, what do we see? Not much, right? Trading sideways, a little bit of accumulation, a little bit of supply contact, this long wick. This is July, and if we get into 3 months, which becomes a better chart, because bank think in 3 months, they have a 3 month short, that's their short-term perspective. They have a 1 year profit target perspective and a 10-year plan. Banks think in 3 months, take profits in 1 year and a 10-year plan, right? But because they are human beings, we know for a fact that those human beings are extremely predictable. Because they're predictable, they do things that make the markets readable, because they become repetitive, and because they're readable, if you know what you're doing, you can become profitable. Tell yourself that all the time. I'm not repeating this for fun. It's not a tagline, bro. I'm actually talking to myself, but teaching you as a trader how to talk to yourself. Like, people think like there's no magic to this thing. Spend time, get obsessive, but also make sure you tell yourself you can do it. You have to. This is one of the hardest ways to make money. All right, so you really have to make sure you're good up there, right? So we've got a bullish engulfing pattern. You've got some broken supplies. I assume they are governing supplies. I don't want to remove this yet, but I can see that price is bouncing off this area. This is not the type of supply I would hold you to. I wouldn't say, yeah, that's a great supply, you know. On Kinihashi candles, we can just see a clean upward movement, a short a bit higher later on. But on the governing time frame, which is happening right now, this is the chart controlling in the now. Conversion ratio has arrived. Has price arrived at a discount place? Has price sold enough? And because they've sold enough, they then bought up or started to take profits. That's how it works, by the way. Buy up to take profits. So they sold going down. Then they started to take profits. So when you start to remove your sell orders as institutions, price automatically starts to fly up because the selling pressure is being reduced by taking profits. How do you take profits? You close your sell orders. So when they close their sell, when we look, that's why I say that CFTC video, master trader spreadsheet on my channel, or having one for yourself is so key, because when you start to track when they take profits, price will go up. But at some point when they're done profit taking and they want to go back to making money, more money, and the agenda is to keep pound low, they will slowly start to build their sell positions. They do that at key levels, and one of them is this golden ratio here, right? So golden ratio, excellent for retracement. 0.78 supply curve. You guys remember that class name? Supply, and I know a lot of traders, I guarantee you a lot of traders are not even looking at the supply and demand curve of their assets. You need two curves on two different time frames. Please don't forget that. You need a curve on your weekly if you're entering on daily. Basically, you need a curve on one time frame higher than the time frame you used to enter. And you need a curve on that time frame to know exactly where you stand. And a lot of traders may have completely forgotten that, right? So please, I thought I'd show it to you, but I can't find it. It's absolutely crucial that my course is not, this is what the markets are, ABC. My course is A to Z, how I trade, how I think, my trading edge, my trading strategy, how I look into the market. So it's absolutely essentially crucial that you are able to really see and understand that kind of stuff, because it's there already for you, right? I wanted to show you the supply and demand curve, but then a part of me is like, no, don't waste time. So we're gonna keep it moving. So on the pound, oh, and I see I'm being flagged here that I am not sharing my screen anymore. Isn't this fun? Technical difficulties in every single video? No, it's not fun. But I apologize for that. It'll pop up some point in the background. But for now, I'm just gonna continue. So if you just hear the sound of my voice, and I'm sure you can see me, you just can't see my screen, right? So looking at this DXY chart, right, price retraced at 0.78 level, and like I said to you guys before, that's a very premium place in the market, right? That place signifies top selling, right? If that's the highest you can go on the curve, then that's the highest you can go on the curve. There's nothing more to do there. So if you quote something like that, it's absolutely crucial. Absolutely. Sorry, real quick, in front of you here, you scroll all the way down. For those of you who have access to this, all the way down to module 2. You open module 2 and you just look here, activity, homework. I saw some of you have been emailing me your homework for module 1. I'm going to get to it this weekend. I'll look at your charts that you sent to me. Those of you who joined the course recently and you've done the first homework activity on our course, I'll get back to you this weekend. Right, so supply and demand curve part 1. This is the video I'm talking about. And then supply and demand curve part 2 with 50% body candle. These 2 lectures. And then there's an activity that you need to do for me if you really to prove to me that you understand it, right? This is so crucial to get into this stuff, right? So this is part 2 playing in the background. It's about 93 minutes, give or take 1 hour, 30 minutes, okay? But start off with part 1 so you understand the curve. Applying the curve on your chart, a very good curve, you can keep it on there for a very long time, right? So please, if you have access to the, remember, if you're a 365 trader, this is free. or you enter. Once you enter, it's lifetime access. I'm never going to kick you out or make you pay monthly. What? What's the point of creating all this knowledge if you're not going to use it? Okay, so you've got access to this stuff forever. Use it. I repeat, please use it. If you're new and you want to join, link is in the description. Right. So we see that DXY did turn at a very important, crucial part of the Fibonacci, and I'm pretty sure it's very in line with that weekly, daily high supply curve line, right, which is a different ballgame altogether from what we're looking at on this chart. Right, and price started to drop, and I assume price will continue falling, right? So I do believe there's some weakness to the pound, or rather momentum weakness built into the pound, which fits into that narrative. Strong dollar, risk on assets will have to fall. I keep seeing, when I look at this risk on assets individually, I keep seeing that same theme. Right, next we've got SXY. And by the way, I should be sharing my screen. You should be able to see my screen. SXY is a Swiss franc. I'm not going to waste too much time on this chart because I don't really care that much for it. Those are the things that I trade personally, right? But you can apply everything that I'm saying to every single chart, right? Let's quickly go to 3 months, and maybe this will kind of like create this to trade for me. It's a waste of time for me. Swiss franc coming back to the same areas, up, down, creating double bottoms. If you're a double bottom lover and expected supply and resistance or retail trading strategies, I'm pretty sure you can make some money here. This is that. Unfortunately, that's not what I am. I really, these long wicks, ain't no way you're not going to get stopped out day in and day out. These are daily long wicks. This is so annoying, right? But there's a general sense. We're just here to get the strength of the currency. And right now, the currency is in range and ranging very close to the supply. So who knows? Might get a downward drop. The next one is ZXY, which is the New Zealand dollar. ZXY, the New Zealand dollar. ZXY, drop. It loves to drop. That's its profile, right? If you put it against a strong currency, for example, New Zealand dollar, what do you think is going to happen, right? So strong dollar, risk on assets, all pointing down. I'm doing this because we haven't done it. We haven't done a war room. So this is how you start. This is how you start a good war room for the year, right? EXY, euro currency, right? Tracking my FOMC meetings. This is on the 3 months time frame. Look what happened. Living at this is probably a governing supply here on the 3 months. Let's go to 6 months for fun, for keeps. Remember I showed you the dollar was going up and up on the DXY chart since 2009. This one has been going down since 2009. Monetary policy diverged. So how these currencies interact with world economic issues is very bipolar, all right, which is good because we know what to do with that type of information, right? So 6 months down, 3 months down. Governing time frame, interesting. We've got a slight turn, an interesting move before making contact with demand. Now, this happens sometimes. Banks can make an original turn, or the competition is so high, right? But this last candle is only now. Today is the 12th of February. I can't tell you now. I have to wait for that candlestick, the last one on the monthly time frame, to close. I have to wait for this to close, because I could say it's going back up, and then by 23 February, 3 datas later, or Powell or Trump, somebody does something and this turns around. But I know for a fact that there is a governing demand right below. Why wouldn't you go touch it? Unless the banks want to pull, a rabbit over our eyes, there's no real reason why you wouldn't go, make contact. On the weekly time frame, just to have a look, I'm going to go Akini Hashi just to clear out some noise. When I do this, I'm looking at volume. So Akini Hashi is very good at mapping out volume sells, volume buys. And I get to narrow out if there are any very powerful order blocks I should be focused on. Hello, beautiful girl. Right, so, it's dropping, not much going on there. This is an interesting place to retrace, although already price is reacting somewhere down here. I'm on the weekly time frame, right? But not enough to make a decision on the euro. So I'm going to go to the daily time frame just to see. Daily time frame has been playing a beautiful game. Man, I'm going to have energy. Do you guys remember my first video back You know, I'll come back. In 2024, I said I'm back, and I released a video, and I said I'm calling for Euro USD parity. This was in April. In April, I say Euro USD parity is going to happen. Then I say every year I have one big swing trade that I teach myself to hold for a year, like the banks, because I think in 3 months, take profit in a year, and I'm calling for Euro USD parity now. It's in the channel, and I told you guys what to do. I would bet one of my crypto wallets that no one is in that trade with me right now. I could bet it, right? But it's the information I give you is there. All right, so I see a soft euro. I see a soft euro 13 above a very powerful demand, but nowhere close to it, right? Just above. So for me, EXY seems to be exhibiting some downside pressure. And then the last currency index before we get into pairs is the Japanese yen currency. And if you're bored, this is the job, bro. This is the job. If you don't know your job, this is the job. A soldier's job is to know how to use a gun. A trader's job is to know how to use your charts. If you're not looking at these charts and you're just buying and selling with no medulla oblongata behind it, then you're not doing the job. Japanese yen is an incredibly interesting currency right now. I promise you, a lot of banks are focused on this chart. Why? Because for the first time in a very, 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 very long time, the Reserve Bank of Japan is changing their tone. The BOJ, Bank of Japan, is starting to hike. They are starting to hike their interest rates. Now, after this, I'm going to take a pause break. You won't know. Well, don't worry, I'm not going anywhere. I'm going to play chess with my boy, but the video will just continue. But I want to leave with this very important point right now. Most central banks around the globe, including Jerome Powell, they're doing rate cuts. They're doing rate cuts because they want to control the monster called inflation that they created. Funny, right? The BOJ is like, listen, bro, we maintained for the longest of time a weak currency. That's how we've made money as a nation. I'm talking decades and decades and decades. I mean, this chart doesn't even go as far back as you want it to go back, right? Where we've just always kept our currency low. But now, at the last BOJ version of an FOMC meeting, the central bank said they are beginning to hike. Now, what that means is we're starting to see a phase in this economic cycle where we are narrowing that monetary policy divergence. Monetary policy divergence was massive back then. For example, USD JPY, we'll come back to USD JPY later, but I just want you to get my point. I want you to understand what I'm saying. What just happened here? Can I put it here? USD JPY. No. Okay, return to my layouts. Come here. You have to get it. So most of us made lots and lots and lots and lots and lots of money with USD JPY because it was an easy buy for almost 2 years. We're long on the dollar because we know the Japanese yen, you see, is weak. It was weak and the other one was right. So if you have such a thing, it's called monetary policy divergence. You had one bank, Reserve Bank, FOMC in America saying, listen, we want strong dollar, we're going for rate hikes. And then your Japan saying, no, we're keeping our yen low. So none of these two banks are moving in the same way. There's divergence in how they approach. So this is what it looked like for a very long time. USD JPY. I'm going to put USD JPY chart here next to you. So as this is happening all the way down, right? Come here. I'm going to go 6 months. 6 months. I will come back to this chart properly. But guys, you won't remember everything I say. I hope you have a way to watch videos, pause it, write things down. Can you see this chart? So now let's go all the way to where this starts. July 2011. July 2011. I want to find July 2011 on USD JPY charts. Is that a coincidence? Is that another conspiracy theory, Leroy? That the USD JPY, what does this mean? What does it mean? Well, it means that when monetary policy divergence stuff, a strong dollar buy for USD JPY. We've arrived at a supply for USD JPY. We'll talk about that later when we get to this chart. But I'm just saying, look at the difference. This chart is going down, this one is going up. So when I meet traders on my trading floor and we're having quarterly meetings, I want to know that you know this before you touch money. You have to know what's the plan for the next 3 months because it shapes your trading strategy. You bring the rules. Market brings the market. The only variable in the market is the trader. Do you show up as the best version of yourself every time you show up on the charts? And to do that, you need to have wisdom. We broke this down in my crypto video, right? Proverbs something. King Solomon say, wisdom, get wisdom. It's the most principal thing. And I told you guys, getting wisdom for us is getting right information. Take the course. But that's not enough. He says, after you get wisdom, acquiring understanding with all your might, understand what you've learned. How do you get understanding? He said it in the amplified version. I read it for you in my previous video. It said there are 3 ways to get understanding. Number 1, you need mature comprehension. No, you need discernment. You have to discern what's going on. Everybody on YouTube is telling you to do whatever you want with the markets. Discern right information. People know, really choose who to listen to. All right. If 365 style is not for you, and go see, thank you, goodbye. If it is for you, subscribe to the course and follow suit. Number 2, mature comprehension. I told you, mature comprehension is back testing the stuff. There isn't a single chart that I can look at the camera and go, oh, it clicks to that. That's mature comprehension. I spent too much time doing this. I am obsessive. Where's the book I'm reading again right now? It's in this book. Within the Devil with Napoleon Hill. It's in Think and Grow Rich with Napoleon Hill. It's How to Become the Best Salesman in Napoleon Hill. It's the Masterminds books in Napoleon. All those books are about a burning desire. That's mature comprehension. And the last one was logical interpretation. That's how you gain understanding of the wisdom you got. Logical interpretation is applying the stuff. So you can see now. So now back to our war room right now as I take a big pause break. BOJ, the Bank of Japan said, look, we're hiking now. You know, world is changing. We've decided that means we are no longer interested at keeping the yen soft, at keeping the yen super weak. That's going to change the game again. Another change. It's been like this for decades. All right. We don't know how many hikes they are thinking of doing. We don't know if it's temporary softness. Look at the chart. You know, these guys could do this, hike up to here, and then be like, yeah, that's enough. Okay, you know, it's soft enough now. Let's go back down. Have they done that before? Yes, they had. They clearly hiked a little bit for a couple of months from, say, January 2015 all the way to Jan 2020. Oh, wait. Oh, yeah, COVID. When the whole world went crazy, they're like, time for a soft yen. There's a reason for that. You see, when that monetary policy divergence starts to narrow, historically, because rates have been low in Japan. Now, remember, if you look at all the JPY pairs, if you do this exercise, so I showed you here USD JPY, 1. Just so you see I'm not crazy, let's make up 1, AUD JPY. So let's see, I showed you that Australia was weak. We looked at AXY by itself. Now look at Australia being weak versus all as a weak yen, up. Okay. What about pound JPY? What about pound JPY? Oh, I used the wrong chart. I apologize. Let's go to FXM. I want to use the chart that I'm linked to. Look at this. I even wrote there buy. I printed out in signals for you guys. I was like, let me help them. Let me put it in a PDF document. Hey, bro, 2011, there. Demands have been formed. Price comes into the same demands. Buy. I'm using different pairs. USD JPY, AUD JPY, pound JPY. Let's go Euro JPY. It's going to shake everything. I get so excited, but I don't know if my energy translates. You have to get excited. You want happy money? You have to be happy long before that balance check hits. Early 2000s, I bet you this is a decade later. 000, about 10 years later, prices back here. Banks thinking 3 months. Take profit in 1 year in a 10-year plan. Price went up. So now, you know, the BOJ is like, look, man, we're changing. So I'm saying, study your charts. And It's been always been one directional historically, because the yield you earned from Japan was close to nothing. This is showing you that, look, if you borrow 100 million yen as a Japanese guy, 100 million yen, I would do this easily. If I went to the reserve bank, I'm like, hey, arigato, says, I need 100 million yen. I'll take 100 million yen. They'll be like, yeah, look, when you pay it back, man, just pay it back with 0.2%. We just pay it back. It's almost like free money. Just give us back our principal. They're not adding interest. So what does a smart Japanese Leroy do apart from continue with his shotokan karate? Apart from doing karate there, he takes the money into America. Why am I taking this money into America? Because America is high yields. America is hiking interest rates. So I give you my 100 million yen and I make how much back? I invest in your bonds. I invest in your in anything, in treasury yields. I invest in your S&P 500. And all of a sudden, my 100 million yen becomes 300 million yen in a process of 3 to 5 to 6 years. Then I go back to the Bank of Japan and I say, arigato, here's your 100 million rand that you gave me for free because I didn't have to pay interest on it. But I made 200 million on top of that because I invested it somewhere else, right? So now imagine investors who've been making money like that for years, years, and years. Imagine hedge funds, imagine floor traders like us, imagine companies, imagine insurance companies. Everybody who's institutional knows about this because it was their policy as the Bank of Japan. We say now change it. Now you borrow close to nothing, take those millions and invest them, and all of a sudden you earn it back. So now all of a sudden now they're starting to change that. They want to start to hike. Hiking means we might actually need to start making it more attractive. Number one, for people to invest in us, but number two, to start getting interest back on all these multiple loans we have out there in the world. All those millions that we have, guys, but it's starting to increase our interest rate. Because as the BOJ, we can loan out 3 trillion to the world, and then one day, 5 years, 6 years later, I'll start to incrementally increase my interest rate, right? So, and the reason, by the way, for that was the BOJ said, look, man, our inflation, remains above 2%, and this starting to put a lot of pressure. It's starting to put a lot of pressure on our economy. So it's time for us to become more hawkish, right? So that's freaking fascinating, new changes in the markets. But it also puts us at an end to the currency indexes, which leads me now to want to talk to you guys about indices. So indexes, currency indices are done. So I'm talking to you guys about the NASDAQ now. I want to talk to you guys about SP 500, an entire beautiful list of things. And then we can then call it a wrap. I hope you guys are still doing well. Feel free to pause, take a water break, because there's just a few more things I want to chat about, and then we are good to go, all right? So first chart is, let's start with the Japanese index. Might as well, right? Might as well start off with JPN 225. We rock it. I'm back. You don't even know I left, right, guys? So shake my hand. Sorry for that. On your end, I hope it's just seamless. It doesn't look like I left, but on my end, like I said, I had to leave to go coach at my kids' school for chess and all that good stuff. And before I start the last part of our war room, which is the assets, I said we're going to look at the indices. So when JPN 225, I think that's the last thing I said before I had to dash out and leave. Something fascinating happened. So it's 8 p.m. now. And if you guys remember, I showed you the time, or when we're looking through Forex Factory, CPI data had not come out. It's one thing when I do this the next day on a separate video. You are getting this stuff in one video because I recorded a little bit in the morning when I had a gap, and I'm finishing off right now at night. It's 8 p.m. now. CPI data is out. So you get to rewind. Go back and rewind and see what I said about CPI. Understand how it moves, and then see what the markets did, which is what I want us to get into right now for 2 seconds, and then we're going to continue into our indices. Like nothing happened, right? But I find that quite, this is really helpful. This is really a very good way to understand macro, fundamental sentiment, and our strategy. When you join these two things together, magic happens. Apologies, I'm trying to open Forex Factor in the back. background, but I'm fading. So let's do this properly. Right. So, whenever you see this video, you'll know that Wednesday, the 12th of February at about 3 p.m. in the afternoon, CPI data was meant to be released. And it's come out now. And if you listen to what I said in the exact same video that you're in right now, you would have noticed that I broke down those values, those numbers. I told you, be careful of journalists. Journalists are very powerful people. We need them. We need the news. But for trading, there's a specific type of news you need to rely on, right? Now, look at this. So from today, CNBC, everywhere, there's going to be inflationary news, right? And I want us to see how we got there. So I'm still on Forex Factory. I'm showing you guys exactly what has happened since the last time we spoke. I trust and believe I'm sharing the right screen. And this last part won't be too long. I pray, I hope. Right, so check this out. So where we go, Tuesday, Wednesday, there. Wednesday, core CPI was hot. I said 0.3% is normal below, but if it comes 0.4, I said look out for the dollar. Dollar has to be strong. Risk off assets have to sell. We're gonna go see, what happened. Because remember, as an intraday trader, this matters the most to you. As a swing trader, I couldn't care. I really couldn't care because I'm looking at long-term movements. But for you guys who are short-term traders, the Nasdaq fell about 300 points just because of this. 300 points, beautiful lot size into a demand, and then reversal is happening as we speak right now. And then CPI month over month, 0.5%, and they're expecting 0.3. And then I said the most important one is CPI year over year, and year over year we've got 3.0%, and they're expecting 2.9. I opened each of these data sets up for you, and I say, no matter what they say, remember that since September last year, CPI year over year has been slowly increasing. If you come on month over month, you might get a weird picture. You'll get it hot here, September, October hot, and then in December, November, you'll get them get exactly what they expected, and trust nothing. Market data is manipulated. Media is owned by powerhouses. Trust nothing when it comes to your portfolio and trading. Only what you see. Simply follow and observe the flows of cash. And then last year, January, in the same video that I'm doing right now, last month, right, in the same video, I told you that, well, inflation came at 0.2, which was 1% lower. But I said, if you look at the year over year, you will see for yourself the truth right here, that inflation has been steadily increasing. Every time they want 2.3, they got 2.4. When they wanted 2.6, they didn't go down and maintain. Then they started scoring it, maintaining 2.7, 2.7. But from 2.5 September all the way to January, 2.9%. That's an obvious slow but sure incremental growth, which means I can predict, not that I'm Moses or a prophet, I can tell you that in March, Jerome Powell is going to talk about how we are worried about inflation. We are worried that we're not, our main concern is to keep inflation under 2%. Well, today, as of 12 February, we are now at 3%. So we've got inflationary concerns. Now, why is this important? Because we need to know what Powell is going to do. Are the Feds going to U-turn? Are the Feds going to cut rates? Are the Feds going to go the BOJ way, which is hiking rates? We discussed in the same video, right? So this happened. Now, I'm going to quickly show you what that looks like if you're trading this live. So let's check the time. So the news dropped at 3:30 p.m. So I'm going to go to the 1 hour time frame and prove me wrong. Prove if my course is wrong. Prove if what I teach is wrong. This happened today. I literally went to go play chess with the kids, and this happened today at 3 o'clock. So let's go. Let's check this out together. I'm going to quickly share. We'll look at NASDAQ. We'll look at the dollar. We'll look at Euro USD. We'll look at three assets based on that same principle. The principle being, you understand what the markets are doing. You understand that data is about to come out. It's highly volatile, and you want to know what that means for you as a trader. That's all we're doing. Like, how can we put those three things that we've identified? Apologies for the red eyes. Believe it or not, it was 40 degrees where I am, right? Where I'm staying, it was 40 degrees. So I've got a migraine headache, and that's how I know the second part of the of the war room is not going to be too long. It's time for me to go take a long nap, right? So in front of you should be NASDAQ 100. All I want us to do is to do a simple exercise. When the news came out at 3 p.m., where were the charts? This is what we call back testing. This is what happens when someone gets in front of a camera and says, take my course. or join my this, or do what I'm doing. Go back test for yourself first to see if it works. Don't follow people blindly. That red candle there came out at 3 p.m. today. 3 p.m. today. That red candle on the 1 hour time frame on NASDAQ came out at 3 p.m. today. CPI data dropped at 3:30. That red candle at 2:30. Let's go to the 30-minute time frame. Let's make it even more fun. 30 minutes time frame there. So 3:30 p.m. is this big candle. The first little one, the Doge candle, is at 3 p.m. At 3 p.m. is the first main red candle after price has been climbing up bit by bit. See, from about, say, give or take 11 a.m. London session today, 12 February, there was some buying high into a supply zone. Now, why would you buy high into a supply zone? When a retail dumb traders or people who don't know markets, who have not acquired the wisdom to buy in an area of value that you know you're going to sell. Why are you going to sell? Because you're going to do what I just showed you. You're going to look at historically CPI. You're going to see a pattern. You're going to see a trend. You're going to go, but inflation is clearly hot. Trump came into the markets in November. Do you think Trump slowed down the economy? You think all his promises and all the nationalist rhetoric, you think that slowed down the economy? Of course not. And ironically, surprisingly, coincidentally, or even better, the ones who sparked my life, randomly, those who believe the markets are randomly, markets rallied into a supply. When markets get into a supply, lo and behold, price broke. It broke through, shot through a previous demand day, went about 300 points. A good lot size, holding this trade for approximately an hour, would have made a lot of money. How do you know when to get out? Look left, there's another demand there, right? And I'm pretty sure it'll be interesting to see if this area holds. It'll be very interesting to see this area holds. So NASDAQ is fully recovered. The impact, the shock waves of CPI data, there's definitely inflation. And what did I say? I said if inflation comes in a little bit hot, and for that moment, I expect a strong dollar, right? And risk on assets to fall. So this is the dollar chart. Let's go to 1 hour time frame on the same day. Let's see what happens at 3 o'clock. At 3 p.m. here, I'm pretty sure it's this big green candle. There we go. At 3 p.m., while NASDAQ, which is a representation of risk on assets that were falling off, right? So we're risk off now. We are literally very sensitive in the markets. The dollar printed a strong green candle. The dollar printed a strong green candle in a supply, Leroy. I wonder what that means. Well, it did create one in a supply, you're correct, but it also broke through the supply. What's that? What does that mean? That's an indication that after they're done whatever they're doing in industry correction, the dollar has created room and space for it forward to move higher. Why? Because there is an inflationary crisis in America right now. CPI has proven a little bit hotter than expected, which means we need to keep our money in safe havens. We're pushing back. It's good for the currency, basically, when you see data like that. And you can see, while we've printed a bearish engulfing pattern, we've also opened the way up. According to our trading strategy, I don't know how you guys trade, but when I see a broken supply, I know never to try and sell at that area ever again. Yes, price charts right now are repairing that supply zone by creating a new bearish engulfing pattern. But personally speaking, I know to ignore that. That's got nothing. That zone there has nothing to do with me. Number one. Number two, I'm still a dollar bull right now, although I know that we've connected to a higher supply. So now we'll be watching this carefully in our next war rooms moving forward, right? So, and then, okay, fine. Euro USD is the last one. Excuse me, just to give you guys real indication that the markets are readable, because as we always say, human beings who control these markets are predictable. Because this is readable and everything's been predictable, you can become profitable, right? Euro USD on the 1 hour time frame, this is a very recentive asset, right? As the dollars right now, right? Euro is trying to benefit that. We'll talk about why my chart is marked like this. But let's find 3 p.m. today. 3 p.m. today, when CPI data, I can do this all day. mature comprehension. I literally know which assets to look at. I literally, it's 8 p.m. Just had dinner with my family. I'm looking at the charts now. For example, Bitcoin. I bet you Bitcoin fell as well. All these are risk sensitive. Once you know how to move around the market like that, right? Once you have the right wisdom, take the course, wisdom, mature comprehension, back test, get discernment, make sure you understand me, my one-on-ones, and logical interpretation. Apply this stuff to make money. You will be not, right? Let's quickly find Bitcoin's the last thing when you get back on track. Same thing as the dollar is printing that big red candle, all these markets are now correcting. But look what's going on, right? So Bitcoin has removed the supply. You see my zones? I have to adjust them right now. This is very interesting, right? Which means my doesn't behave by Friday, or maybe I see how it reacts up there. I might have to close the cells I sold earlier on. But let's find 3:30 p.m. There you go. No, 3 o'clock. Big red candle. There, 3 o'clock. Just above the supply, reaction all the way down, drops into nearing neighboring demand right there. I'm not making any of this stuff up, guys. Right there. This is on the 1 hour time frame, by the way. Let's make sure the screen is perfectly clear. Oh, look, I've even marked this area with red lines. Oh, okay, cool. So I spoke to myself a long time ago. Nice 1 hour demand, price reacts there. Price does not come back to this 1 hour demand. 365 module 1, our areas of value, doesn't come back for the second time. So here's the second time. And because it's coming back for the second time, there's a difference between a fresh touch on an area of value and a retest on an area of value. If you're a true 365 trader, you've done my module 1, you would know that retest is where the money is, right? So it's time for me to close my sales on BTC, but we'll talk more about that when we get there. Tomorrow is Thursday. I have to make another video tomorrow. Tomorrow is Crypto Thursday. Yeah, Leroy, when are you coming back to make videos? I'm back. Can you catch up with the videos? I can't even catch up with my own videos, but I'm back. Let's get this money. Let's get this information. Right, so before I had to take a quick break, I was about to start the indices. I'm going to fly through these charts, ladies and gentlemen, because I suspect this video is already too long for what YouTube says is your attention span, right? But if I play a 2-hour movie for you on Netflix, you won't complain. You Netflix and chill, eat popcorn, make no money, procrastinate while watching prime actors make money. Some of you procrastinate by watching other people do their job well. That's crazy, bro. That is crazy. You can't tell me my videos are too long if you can do a Lord of the Rings marathon in the weekends. That's crazy. That is crazy. Some of you listen to albums the whole day, just playing music, just nodding your head saying, I'm a piano spiritual. That's crazy. I'm right here giving you bread for free on YouTube. Watch the video properly. Subscribe. I demand it, please. Only because I know this is going to help you. Right, so Nikki 225. I digress. Let's move on. But that's crazy. You will only get out of life what you put. It's called the law of compensation, right? You simply get what you deserve. Simple. Go get mature comprehension. Spend time with your charts to get the money, to give you the type of freedom to Netflix and chill all your life, whatever it is that you do with your free time. You don't have free time if you're broke. I've never understood that with people. Free time when you're broke. I don't get it. Right. Anyways, let's move on. Right. JT225, I'm going to ignore these current candles, that especially today. They are sensitive. CPI has just dropped, right? So I ignore that kind of stuff. We're going to look at this indices. See, I've sold it, I guess, once-ish this year, and then I took my profit sometime in January, it seems, and I haven't gotten in again, and I didn't get in again specifically because I wasn't entirely sure, right? I wasn't entirely sure of the zone, right? Once the zone has been hit more than twice, personally, I stay away, right? So after I missed a fresh touch, got in the retest, and I took it. This was quite a risky trade. Clean demand. As soon as I took it and I got out. Right, so I'm not in this trade right now, but I like this index, right? If you trade this index alongside Nasdaq, you generally get a correlation, number one, and this index sometimes moves a little bit faster, and depending on the broker, pays better per point. If you didn't know that, right? So we've got consolidation on the governing time frame. And that consolidation is sitting on top of a governing demand, right? And that governing demand right now is very reactionary. Price has started moving up since the beginning of this month of February into this demand day. I won't clear up my charts if that's okay with you. We'll just keep dropping. Lower time frame will get clearer and clearer. Weekly time frame following a bullish engulfing pattern, want to go up. daily chart is where the problem is. So for me, I won't even lie. You know, this has been nice. For me, I'm going to wait for the supply area to be removed, personally speaking. I probably won't be in this chart for another 3 to 4 weeks. Only because I really want to see. Personally, I like selling J225 because I've been keeping a spreadsheet of my trades for years, so I know I make more money selling this asset than buying it. It moves faster. I mean, imagine catching a beautiful sell like this, just violently breaking through, right? It makes more money than this long-term consolidation to the upside. So I'm going to see if the supply holds. If it does hold and better structure is formed as price is going down, I'll get into a lower sell, which is not advisable, but that's my take, right? So up to you. The monthly and weekly are very bullish, right? But there's no alignment yet. Gotta align market time frame correlation, market time frame analysis. That's in my module 1, right? Are the 3 long lectures on MTA, market time frame analysis. We need an alignment, right? This gap was caused by Trump talking about tariffs. See, do you see the volatility you're gonna face this year when Trump talks, right? Whoop. So markets have been consolidating. Now markets are trying to fix this market inefficiency, this gap here, by filling the gap. And there's another gap all the way up. There's another supply. So like me, if I'm bored and I come back to this chart on time, I might want to trade the gap. You know, gaps are big supply zones, so I might do something like that, right? Maybe. I don't know. It's not a real signal. I'll see how I feel. I'll see what the market sentiment is at that time. Right. The next one is the Nasdaq, trying to move through these assets as quickly as possible. So about 8 that we need to go through. Then I'll call this video a wrap. Appreciate you for watching all the way. I know I am the one who is blessed to have your attention, so I really don't take that for granted. Please don't forget to subscribe. I also hope that the engagement is mutual. That you're getting something out of these videos, and if you are, please let me know in the comments down below, especially if you've made it this far into the video. You know, that's quite insane, right? Nasdaq is playing around, man. There's a supply. This crazy week that you're looking at on the daily time frame is because of CPI. That sharp drop that happened at 3 p.m. right, and now a hidden demand has been hidden on the daily, but very clear on the 1 hour, 30 minutes, lower time frames, etc. What a very, very ugly chart. This is an ugly chart. This is what it looks like when you look ugly. All right, poor trending, poor structure. These markets are just playing the efficiency. Markets don't know what to do, man. You know, with Trump, you never know. You don't want to move too early, too slow, right? I think overall, so that, like I said earlier on, I cannot share my CFTC spreadsheet right now because currently the one that I have that's up to date is for the floor. So we've got client stuff. We match. We've got our actual positions, and you know, it's not. It will not be professional for me to put that publicly, right? But I will catch up and create a CFTC spreadsheet for public consumption. But like I said earlier on, there is a video I've already done that stuff. And from CFTC, you know, Nasdaq is it's just like literally almost neutral, right? If we're looking at the longs and shorts, number 1, number 2, we can edge buyers on this chart, right? So the buyers are not aggressive, but there's actually more buying than selling happening. So maybe later on, we are looking to see more moves to the upside, right? But remember, markets will never have money at equal sectors at the same time, right? If money is going to dollar, other industries have to suffer. If money is going to other industries, the dollar has to suffer, right? $40 degrees. I'm pretty sure it's like 35 degrees or 33 degrees right now. In the Eastern Cape is the pits, man, and we're like in a citrus area. So apparently this is the best climate to grow. Where we are, they export now cheese, oranges, dragon fruit, all sorts of weird things, man. But yeah, it's a massive global food is a massive global exporting citrus town, and it gets very hot. Aircon or no aircon, once you step outside, everybody melts, right? So not much to say about Nasdaq except for lookout, right? So you got a couple of supplies above, a couple of supplies below, and you know, demands to keep price in a range, right? Price is just messing around in the same range. I think I'm gonna take a chill pill for a while. But right now, if you wanted to know what are the active zones, the supply in the gray and this demand in the green. These are the only 2 active zones on this chart right now. If price was to fall, which for me would be better, it would be much better for me to come try my luck at the glass effect area here, where this demand has already been weakened, and then to buy up here. And I don't feel like selling down up here until I have a clear sentiment, right? So if markets really fully react to inflationary news for the rest of the week, so if something else comes up to kind of like confirm that stuff, like this PIC or PPC, what's those terms? Something on Friday around on the production end of inflation. So if that was to could also confirm that, and it's a Friday, Wall Street is more eager to sell on Fridays, then maybe that would be great, right? I do, full disclosure, have very little sells in this zone there. Very, very little sells, minor sells, 0.10, 0.9, something along those lines, about 2 or 3 entries that I'm holding here. I didn't enter them today because of CPI. I just had them because of this weird supply zone here, right? But it's not crazy wins. But if it does work in my favor and price does fall, I'll definitely enjoy that particular swing. Right, US 2000. I did say we got to look at the Russell. Just get used to seeing these mid-cap companies, mid-cap indices, and they really trade well. They move nice and slow. This is a 2-hour time frame, so I'm going to assume this big red candle in front of you is the impact of CPI. Guys, once you understand what I'm teaching you, there's so much money. Like retail traders, like if you trade around news events, CPI very much square with the previous supply. Look left, this is literally module 1. This is not even like a complicated part of the course my traders is. This is just focusing on module 1. Oh, fresh start. Oh, retest. You knew price was coming back there, not because of CPI today. You knew price was coming back there on the 10th of February, 2 days ago. As an intraday trader, this was made clear to you 2 days ago. Leroy, why would you say that? Well, I say that because number 1, price has failed to go high for a while. Number 2, price has been printing lower highs. Number 3, price has created a valid supply, giving you a fresh test and come back down. Number 3, this is the closest supply to a 365 number. Now, the 365 number part, that's in module 2, but you'd know this beautiful stuff. So there might still be a market sell-off in the indices. NASDAQ is acting all powerful and strong right now, but there might be a short-term drop and then a bounce later on in the following. We'll see, right? But this was easy money, right? All these big movies are easy money. Now, what are markets doing? Are markets going back to retest the zone, to retest the shock, or are markets preparing to go up, right? This is one of those wait and see. Big imbalance, this sharp selling, right? So we don't know if all the sell orders have been executed, if they're done, or if there's more. Really don't know. We shall see. All right. So that's something to look into, look forward to. But I really do like how clear this stuff is. Right. SP 500 is the next one. All right. 3 Rottweilers. One, the smaller puppy, turned a year in December. He's already testing for alpha. And he's challenging such a big boy. My other Rottweiler is like 5 years old. So if you can hear barking at the back, I'm a little bit tired of breaking up the fights. Sometimes you F around, you find out. So that's what he's going to have to go through today, right? S&P 500 from a CFTC point of view, I can tell you right now, everything looks bullish on this chart. Bullish. So I'm holding my buys. I'm not letting them go. I got into this market mid-Jan. For myself, but also on the floor. Let me show you what I mean. So this is the chart on the governing time frame. See this print here? Bullish engulfing pattern. This was about October last year. Election, Trumpy, and then consolidation. Big pump. Woo! Now let's build. When they consolidate, they create a PCP, potential continuation pattern. This is what we call a Talitha area. My original 365, shake my hand, Talitha area, right? So the PCP is building up. If you're in S&P 500 now, this is going to be one of the zones. This between say 6,100 to 5,700. This area here. If you get in now, whether you're buying stocks for long-term holds, so 3, 4, 5 years, or positional swing trading is what I'm doing. You might shake your hand and thank yourself later in life if you enter positions here to hold. Some of you, that's what you need to do. You need to have 2 trading accounts. Trading account number 1 is your absolutely rule-based trading. Literally, you've gotten the wisdom, you've done module 1, module 2, you come in for war rooms to get the discernment, to understand what I'm saying. You've done mature comprehension, you're back testing stuff, and now you're doing logical application, right, or interpretation of the thing. Account number 1 is that. It's a small account, whether you're building from $100 US, 200, 1,000, whatever small is small to you, right? Risk-based, all that beautiful stuff, taking profit, no need to stay in the markets. Once you get that 1:3, 1:4, 1:5 risk-reward ratio, you get out. You book profits, you grow capital. You book profits, you go. That's the job. The job is to protect capital, by the way. There isn't any other job in the financial markets than protecting capital, so you can trade again tomorrow. Your second trading account should be for swings. Just try what this guy is doing, this guy called Leroy, where you find a valid demand with massive confluence. I'm talking governing, weekly, daily, and you buy and hold. You buy and hold based on the name of the academy, 365. You hold that thing for 365 days. You do nothing. You just watch your equity grow. You don't mess around now and start opening 10,000 positions. No, just you can buy and you accumulate, build a position properly. The same way you got position 1, wait for a retracement, a new demand. I mean, I could teach this stuff as the year goes by, but I've done it already in module 1. That's why I don't understand why I need to teach. But if you guys want to do, remember this video. That's my new thing now. I just tell you stuff and I'm like, I'll come back to this. I'm going to write it down. I'm going to come back to this. Top February, S&P 500 is trading around $6,000 US, and I'm telling you that 365 days from now, you will wish you had bought all these positions that I've opened and you're holding them for me. More importantly, you wish you're going to buy the ones that will show up in the next month. There'll be multiple entries to enter into this thing, right? But anyway, on the H4 time frame, we've got a lower demand that is not tagged. We've got another demand here that's not tagged. But right now we're playing around the 6,000 line. The 365 number is 6,000. It's really doing a good job of holding the number. 6,100 is really doing a good job of creating a range for us. So we've got a beautiful supply. I wonder how it got there. Must be a conspiracy theory for those of you who think markets are random. But for those of you who know better, you know what we're doing, right? So please watch this chart, because I suspect that the supply will break. And I suspect we're going to go up, and we may go up without you. Now, where can you jump in, which is the whole point of these war rooms? And I have to be like honest with you guys, right? A lot of these positions I'm already in. So I will be showing you guys where you guys might want to consider going in, and some of those positions are going to be my second or third or fourth entries, because just because I wasn't making videos does not mean I wasn't trading, right? So please bear, I just want full transparency. I don't want like later on at the end of the day when we're now showing results, this discrepancy. How come you've got more than us? I've been in these markets longer than you. I've been in these buys much longer than you. I mean, longer than you, right? 13 January, 14 January, right? So I'm a month ahead in the swing, and I've already taken my first retracement, right? Remember, swing high, retracement, right? And then we're going back up. Retrace. I was in there earlier than you. So you're trying to enter now and join the trade. All right. So just remember that kind of stuff, right? So on the daily time frame, to be honest with you, I don't see the type of entries that I would like to use at the moment, right? Except for the ones that I'm into. So that's why I'm saying I'm able to see a pullback into the store area, but that's because I'm only using H4 time frame. Right. So this is a good zone, very big. So I'd make it smaller, right? So I'll make sure that if I'm targeting 6,000, once again, remember we said 25 points after a 365 number. So that's just 0.4, right? So you can see markets tried, right? But markets came into the second bullish engulfing pattern, and that's only 0.11. So 25 could go all the way here, right? And you can see it's not like I'm making stuff up. At 6,024, almost 25, it covers this bullish engulfing pattern. It shows that that's where the market bounced. It shows that's where the next bullish engulfing pattern started, and it's where almost the next market bounced. So I don't know if price will come any lower. Right now, there's a lot of bull signal, right? If I go to H2, maybe, can't say it, bro. I wish you were in it, bro. H1, maybe. Right, so H1, we've got what CPI did today at 3 p.m., like any other risk-on asset that I've just shown you. So if this triggers a little sell, then that's beautiful, right? That's very beautiful for everybody. But I would be looking at a daily time frame. I can tell you for a fact that I'm really hoping to sell the Dow and hoping to buy it. So Dow would be a good example of what I want to do in these American indices. I don't know if it's next. It's not next, but let's quickly go to the Dow. I think I could type that one out. Dow 30. Let's go to the daily time frame, and I'll show you what I mean, because I know the Dow does have a demand somewhere. No, this is not it. US 30. The Dow has a demand somewhere because I've got a pen in order. That's why I know, right? So US 30 on the daily time frame. There we go. Right. So I've always marked this for a long time. Unfilled orders, beautiful buy base. Friday, you buy the US Dow. That's a market signal. Not that you should do it. This is just educational. I'm not telling you what to do. I am not your financial advisor. Just because I'm registered and licensed does not make me your financial advisor. You didn't pay me to give you advice, right? So please, this is education content. Trading comes with excessive risks. You will lose everything. You will lose your life, your kidney, your wife will leave you. They leave broke people these days, bro. Your kids will deny you. Okay, they'll say, my dad went to go buy bread and never came back, even though you're home every day playing PlayStation with them because you're broke, right? So don't just listen to me because I said so. Do your own homework, market comprehension. But personally, me, I'd like to buy the US 30 down there, which is personally to me, I'd like to say indices fall. I don't know if it's going to happen. I don't know how long that will take. But thanks to CPI, inflationary data, this is good. So US 30, I've shown you. SP 500, I've shown you. I've said this. I can't see a clean demand for me to give you right now because we're just active already in the markets. But hopefully there's going to be a pullback or a creation of a new demand, or markets will rage until they get tired, right? So we're going to see the hot markets move first. NASDAQ will move first. Look at J225 because that always indicates which way NASDAQ is going. US 30 might start to move. Look at the micro midterm cap companies with the Russell 2000. Once you get a clean correlation by Thursday, Friday, this week of what's going on, you know what to do next week, right? I'd love to see a drop so we can buy. All right, so the last indice that I wanted to look at was the UK 100, just to look at what's going on in the Eurozone. This used to be one of my favorite things to day trade. As I was back testing my module 3, which I know some of you were like, when is it coming out? When I'm happy with it. Module 1 and module 2 guarantee money on the table. It's actually, there's 100% guarantee on our course, by the way. If you follow all our rules and you show us with your broker statement, if you follow all our rules and you do your account by following all our rules, you get your money back, right? So module 1 and module 2 are built on such a guarantee. And that guarantee is the fact that I've back tested everything that I teach. And there's an 80 to 85% win rate despite your trading psychology. All right. Module 3 right now, still, I can't get it above 75%. Now, 75% win rate is good for an intraday trader. It's excellent. Don't get me wrong, but I want it at 80. And I won't stop perfecting it until it's there. Until it's there, I'm not releasing that stuff, okay? So I am working on it. I'm tweaking my stuff. I'm studying more. I'm opening. I really want to get it at 80%. By the way, how do we do this? You do this manually, but if you want to sell a course, you have to buy ticker data from the markets and run an AI, give it the rules, and then a bot, and let it trade over a scale of like 10,000 trades. I want a 70 and 80% win rate. I want it, and I'm going to get it. I won't stop till I get it. Right, so there's UK 100. On the governing time frame, you saw it's just flying bright like a diamond, right? It's flying, and it's left us a beautiful area of value to come back to later on this year. And coming back here is going to be heaven for manna, because once we get on this joyride, don't get out. Once you get in this area here, don't get out, swing traders. Don't get out. Where are you going? Let's see where the journey takes us, right? On the weekly time frame, we're exploding. We are making sure we create some sideways movement in the parabolic structure so that we don't snap later on, which is very good. And on the daily time frame, that's what we have, right? It's creating all-time highs every time it prints a new candle, which means there is nothing to look left to. There's no supply to stop it. So all we need to do is to watch this baby fly. And then the moment we start to see the S, remember the S from module 2 where I teach S, right? The moment we start to see a final swing high created, we pull up anti-Fibonacci. Anti-Fibonacci is going to guide us into where we enter. I'm looking for pending orders at 7.8% levels, and definitely our golden ratio, which is the 61.8%, right? So not much to do here, and to wait for a retracement. Don't be crazy and start buying now, right? That's crazy. I want a bigger retracement for a bigger swing in the governing time frame. But while I wait for that, I will settle for a daily retracement just to give us some structure. I suspect it's going to be somewhere here where there was a gap consolidation, bullish engulfing pattern, exploded, and I'm pretty sure there's a young liquidity sweep there. So we'll see how that goes, right? So that's all the main indices that I wanted to do. And then I think for now, ladies and gentlemen, let's end the war room part 1 here. I promise you, AUD, USD, all the currencies, all the gold, all the what is coming this coming Sunday in the next war room 95. It won't have this long introduction of markets. I won't look into CPI, PPI, because I've done it now. And if you watched until the end, shake my hand. Thank you so much for watching. Thank you for subscribing. I'll see you in the next video. Don't forget, on Thursdays, as long as life is fair to me, on Thursdays, my prayer is to drop a crypto only video so that I don't talk about crypto in the war room. So episode 2 of 365 Crypto is coming out on Thursday, the 13th of February. If something goes wrong in my life because of my schedule, please note, full-time dad. I volunteer at the school I teach them karate. I volunteer my Wednesdays in the afternoon for chess club. And this year, the chess club, by the way, is going for provisional teams. Last year, we got 8 players in the district. By the way, if there are any traders out there who want to partner up with me, by the side, if you know what to do in the markets and you don't know what to do with all the money you're making, we are building massive computer labs for different schools in the Eastern Cape. All right. So if you want to join 365 in making a difference in children's lives, let me know. And we're targeting primary schools. We're creating an ICT, Information Communication Technologies program. So if you're really into that kind of stuff, let me know. The money won't come to me. And it's not money that you give it to us, then we trade for you in the market. No. We donate straight to the school. All right. I'm just simply saying, the traders out there want to make a difference. Let's do this. Let's make a difference in our communities. Shake my hand. I'll see you in the next video. And thank you so much for watching. Peace. Right. Supper time.